Welcome to an episode of Singapore Real Estate Explained, where we break down real estate investments in the simplest way possible. So my name is Christian, and today we will be covering a very interesting topic that has been a hot topic within our investors recently, which is commercial offices. So why we're starting this topic is because recently we have been seeing an increase in inquiry from our investors, especially from the foreigners, to buy an office in Singapore. And the simple reason is there's no ABSD for foreigners for offices in the first place. So this is something we'll be covering in a very basic level so that people can understand what to take note of when it comes to buying a commercial office in Singapore. Okay, so a total of 5 points, and let's dive into it. So the first thing is about the taxes involved for buying a commercial office in Singapore. And the first thing is buyer's stamp duty. So do you need to pay buyer's stamp duty? Okay, the answer is yes, you have to. So when it comes to buying a property in Singapore, regardless is residential, commercial or industrial, which I'll be covering in my next few videos, you have to pay this tax called buyer's stamp duty. Okay, so regardless you're Singaporean, regardless you're a foreigner, you have to. So this is based on this particular chart over here, you can see. Okay, so if you are buying below $180,000 price tag for office, which is impossible to come by in the first place, is a 1% buyer's stamp duty. But you're buying above a 1 million, okay, it's about 4%. Okay, minus 15,004. Okay, there's a formula to calculate it. Okay, and above 1.5 million is 5%, okay, minus away 30,400. Okay, so there is a formula to calculate for buyer's stamp duty. So if you have any questions, do feel free to ask any of our brokers, and we are more than happy to cover this topic with you. All right. And the second question is for commercial offices, do you have to pay seller stamp duty? So this is when it gets a little interesting, because for commercial offices, you don't have to pay seller stamp duty. It means you can actually buy today and sell tomorrow. So there is no limit in terms of holding period. Okay. And this is something very interesting because unlike a residential property, where you hold for at least 3 years before selling, for commercial offices, you don't have to hold for that 3 years. You can buy today and sell tomorrow if you have a buyer who's willing to pay a higher price for it. So this is one thing to take note. Okay, the amount of sales stamp duty, okay, it only applies more for in industrial properties like factories, which we're covering in the next segment, okay, next topic for next video. But for a office, you don't have to pay sales stamp duty. So it's quite cool. It's like buying stocks, you buy and you sell. But of course, because of such measures, okay, you don't have to pay sales stamp duty. There could be more speculation in the office market. So this is something you have to take note when it comes to investing in it. All right. So next up, okay, in terms of loan, how much loan can you get for a commercial office? Okay, so before talking about loan, let's break it down into the modes of company you can set up so that you can buy a commercial office. Okay, so basic 101. So take note, there are actually 3 ways you can buy a commercial office. The first way is under person name, okay, which we don't recommend because of many different reasons. But we'll run through the ways of holding for company in this video. Because if you buy as a person name, okay, number one, your taxes are higher, especially for the first 2 years. Okay, second thing is if you have any personal liability, okay, personal liability, where for example, the office caught fire, you may get sued and your personal name will get implicated. Last but not least, buying under personal name may also implicate your total debt servicing ratio, which is, for example, if you were to buy a commercial property, even buy a residential property next, okay, so the loan that you are bearing for your commercial property, okay, will be higher, okay, and this will implicate into your borrowing power when it comes to buying a residential property. Okay, so that's why we always recommend buying as a mode of holding under a company. Okay, but to take note, when it comes to buying a commercial property, okay, there are 2 kinds of company they are looking at. Okay, one is in terms of investment holding company, which is usually what people buy under, mainly to buy for purely to rent out for investments. And the second is operating company, which means this current company actually run an actual business with proper revenue. Okay, so by buying in different modes of holding, you can actually borrow different amount. Okay, but for operating company, which we've been seeing quite a rise recently in terms of our client base, especially our foreign clients, they usually start an operating company because they usually buy this particular property, okay, for own use, so they can run their own business. Okay, and in terms of the difference, okay, take note, in terms of borrowing power, for investment holding company, okay, the loan to value ratio is up to 80%. Okay, and based on different banks, some banks can let you lend up to 70% loan to value. Okay, which means you buy a 1 million property, the amount of loan you can borrow, okay, ranges from 70% 700k to 80% 800k. Okay, and take note, for investment holding company, if you set up this kind of company, it's purely for investment only to get your passive income every single month. Okay, and usually this kind of investment holding, the accounting rates, okay, accounting fees will be lower because less hassle to manage. But take note, you cannot, usually for investment holding, most of the banks will allow you to gear up, which means if you want to use a property that, for example, you bought 1 million, next time it appreciated to 1.2 million, okay, some banks allow you to cash out a 200k difference in terms of loan amount. Okay, but in terms of investment holding, you're not allowed to. Okay, and next, TDSR, some cases it will affect. Okay, so this is very based on case-to-case basis when it comes to a property loan amount. Okay, and next, in terms of operating company, just to take note, you can actually, for loan to value ratio, okay, there are times, okay, you can borrow up to 100%. Very rare, very, very rare, but now it's about 90% actually. 100% was back then, 2-3 years ago, when you can actually get like no down payment at all, okay, for some banks. But recently, IRAs and also the banks have been more strict, so it ranges from 80 to 90% currently. Okay, but for operating company, take note. Okay, take note. Most of this company, you cannot buy this property to rent out for investment, for rental income. So they usually buy this for own use and you have a business in place. And for operating company, usually when you gear up this way, you are actually looking at more of at least a 2-year operating income. Okay, and of course, for accounting fees, there'll be more things you have to do. You have to manage it properly. But the beauty is you can do gear up. Okay, which I mentioned just now. If your property is appreciated in prices, okay, you can actually use your property, the appreciation that you gain from this property to borrow more loan. Okay, so it's some mechanism which is very interesting, which you can do for operating company. And one thing it doesn't affect your total debt servicing ratio. When it comes to borrowing more money using this company, it doesn't have a certain limit. It's more flexible. Okay, so each of the company, when it comes to buying commercial property, has own perks. Okay, but to summarize, in terms of loan amount, something that's comfortable, you want to really talk about market rate, will be about 80% loan to value. Okay, as I mentioned, 1 million property, 800k in terms of borrowing power. Okay, and it's higher than a non-residential property, which is only up to 75%. Okay, however, one thing to take note is your down payment, your 20% down payment must be fully in cash. Okay, of course, there are other buyer stamp duty, other taxes you may have to pay. But one thing to take note is you cannot use your CPF, okay, your Central Provident Fund, okay, which is usually can be used for residential property to down pay for a commercial property. All right. Okay, so next up, number 4, okay, is what are other costs you have to consider. So one thing to take note for officers, a lot of officers actually are GST registered, which means the company that's holding that property, okay, for office, the seller is at GST registered. So in this kind of cases, okay, you may have to pay GST on the whole property price. Okay, so one thing to take note is this year, GST is 8%, which means you buy a $1 million commercial property, okay, which is an office, you have to pay 8% on that 1 million. And this 8%, okay, are you taxed by government? It's given the government, you won't be able to get back. Okay, so this year is 8%, so it's 80k. Okay, and take note, you can use CPF or even bank loan to pay for GST. But most importantly, this is where the true essence of it lies, okay, in terms of the hack. Okay, so usually what people do is they register a GST registered company, okay, GST registered company to buy a GST registered office. Okay, and if you were to do that, okay, in certain mechanism, which is a little more complex to explain over here in this video, you are able to claim back the 8%. Okay, so this is something that you have to take note when it comes to buying a GST registered property. Okay, and another cost you have to take note, okay, is your property tax. Okay, so this is something that every single year, okay, along with your maintenance fee, you have to pay. So these are some costs which we will be diving deeper into on a more one-to-one consult basis, because this is a very, very deep topic. So how we calculate this property tax is they'll pay a 10% flat rate of the annual value of property, which is quite linked to its rental income. Okay, so this is usually a very simple way to calculate this. Is based on 10% of your yearly rental. Okay, and maybe discount a little bit off from it. So this is a property tax you'll be paying every single year. And this is very important. Why I'm sharing this is this will all factor into your returns, okay, per annum. Okay, and this is something that we have to do so if you are looking for investments itself. Okay, and last but not least, we also have the legal fee, okay, which we have to add in so that we are able to calculate the returns in general. Okay, well, one thing to take note is for officers, the rental income is usually not very, very high. Okay, it's not the highest. It's more of a capital gain kind of approach. Okay, but so the question is, okay, last but not least, why do people invest in officers? Okay, so for basic reasons, okay, as I mentioned in the previous 4 points, one key element that people love to invest in officers is there's no seller stamp duty. So you don't have to wait. You can just buy and sell the next day. Okay, and the beauty of it and why a lot of foreigners are looking into officers in this season is because there's no ABSD. Okay, no ABSD in the first place. For now, residential is almost 60+% in terms of all the taxes that you're paying right now. But if you buy as a foreigner, if you set up a company in Singapore, you don't have to pay ABSD. Okay, unlike officers, if you buy a residential under a company today, you have to pay 65%, which is a lot. ABSD, a 1 million property, you need to pay 650,000 in taxes. So these are things that we have to take note, because when it comes to factoring into investment returns, this gives an edge. Okay, when there's less tax on the property itself, you are able to gain a higher return. Okay, that's why the key thing is some officers, if you buy at the right place, the right time, and also understand the basic mechanism of how exactly do we invest in officers, you're able to gain 20% RI returns. You got capital gain and also returns in general, along with rental yield. Okay, but of course, with high interest environment, this is something we have to factor in. What exactly are the returns, which we'll cover in a more personal session. Because at the end of the day, to really understand the office market, this is very basic 101. You have to dive deep in the market, be on the ground, looking at numbers and figures. And the key thing is getting in touch with a real estate investor to invest into a commercial real estate property. Okay, so this is something that a lot of our clients have been asking us. So that's why we are having this video today, so that it can give you a very brief overlook of how exactly commercial office works. So if you like this video and you like to find out more about officers, do let us know in the comments in the Telegram itself, or reach out to our central number right below, so you can engage any of our brokers to see how we can help you in this specific segment. So that's all for today. Okay, my name is Cristiano, and see you soon. Bye.